This is Adrian Manz. If you'd like a copy of my book, Around the Horn, A Trader's Guide to Consistently Scoring in the Markets, visit TraderInsight.com, where you'll receive a 30% discount and 3-day shipping. That's the best price anywhere, only from Trader Insight.
From Los Angeles, TraderInsight.com presents Dr. Adrian Manz in the war room and at the helm with today's look at stocks and sectors on the radar.
For TraderInsight.com, I'm Adrian Manz, and this is Stocks and Sectors on the Radar for Thursday, May 21st, 2009. On Wednesday, Dow Jones Industrials down 52.81 to close at 84.2204. We had 1,584 stocks advance, 1,462 decline, and NYSE total volume on the heavy side at 1.65 billion shares. The S&P was down 4.5 at 903.47. The NASDAQ broke its multi-session winning streak with the 100 down 4 1/3 to 1393 3/4, and the comp down 6 3/4 to close at 1727.84. Minutes from the Fed's April meeting indicated that the mortgage and Treasury security repurchase may extend well beyond the current $1.75 trillion commitment, and that an even deeper recession and a longer, softer recovery may be ahead of us. That was bad news for the markets and led to weakening internals and a drop in the broader indices over the session. That price action, coupled with strength in the safe haven commodities, points to a downside bias in the days ahead and some choppy, tough trading in the individual stocks. Now, the VIX moved fractionally higher to 29.02 on the Fed news, and I expect to see a continued rise over the next couple sessions. That might make for some difficult trading, or it might very well get us to these profit targets a little quicker on some of these stocks and sectors on the radar. Now, we had 4 on the radar for Tuesday. 2 triggered. Royal Caribbean made a smooth move to the target. HDFC Bank, that one scratched us out once and then gave us a couple shots all the way down to the target. But that ADR trades in a volatility pattern that even had the best of us feeling pretty queasy throughout the session. Let's take a look at RCL and HDB on a 5-minute chart and then see what's on deck for Thursday. HDFC Bank. This one, ticker symbol HDB. This was a doubleheader short side setup. We had a 91.30 entry, a 90.88 target. This one is an American deposit receipt. They're proxies. They trade a little bit on the crazy side when volatility gets into the market. Got us in, took us straight from the 91.30 level, got us down through the 91.09, 50% to the profit, and then turned around immediately to close us back out again right at the entry price. This thing came back in again, got us just before the 11 o'clock mark on the NYSE, took us in, got us down to the profit target and beyond, reversed back up again, and then did the whole dance another time. So they're not for the lighthearted. The ADRs are definitely something to look at because they can provide you with plenty of intraday range and travel opportunity to and from your profit target, obviously, but they can really put even the most seasoned trader in the position of feeling pretty seasick, which brings us to our next trading candidate for the session, Royal Caribbean Cruises Limited. Following the trading plan on this one, 12.15 got us a switch hitter short side entry at $15.36, and at 12.30 we had an exit exactly at the profit target. 14.97 stopped this one dead in its tracks. A quick point that I want to make, if some of you happen to be trading in these same securities, you might want to think about not leaving stop orders out there, resting stops that go and pop the market back in the other direction. Sometimes these things get right to the profit target. I'll be watching the New York Stock Exchange Open Book. I see a bunch of orders pop up there, and then they sit there. And, of course, we have to wait for the market to go, fill the orders. Usually winds up doing a little reversal like this before coming back in again and taking out the remaining shares that are sitting there. Much better as a trading methodology to actually watch the trades, babysit them. That's what I do. I don't put in a resting stop order for anything. I'm just on these things. I go, I take them when they hit. I exit when I hit my profit target, or I exit on an extension when something goes and blasts through. Not saying anyone watching this video does that, but just as a matter of protocol, most traders I know don't go and put stops in ahead of the market. They let price action determine when to close a trade. On the radar for Thursday's trading, I've got 2 chemicals and 3 energies. The first one I want to look at, Agrium Incorporated, ticker symbol AGU. This is an infield fly setup. Short side, entry is going to be around 5101 with a $50.70 target. Next one, also in the chemicals, Mosaic Company, ticker symbol MOS. This is also an infield fly short side setup. I'm going to look for a 56.37 print as indication of an entry opportunity with an initial profit target down at $55.86. Now, on to the energies and energy equipment and services. We've got Cameron International Corporation. This is ticker symbol CAM, another infield fly, short side setup, entry $30.51 with an initial target at $30.18. Consumable oil and gas, we've got Murphy Oil Corporation, ticker symbol MUR, infield fly, short side setup, $56.85 on the trigger with a $56.43 target. And finally, also in energies, oil and gas consumables, Cimarex Energy Company, ticker symbol XEC. This is another infield fly, short side setup, $30.69 on the entry with an initial target at $30.27. Remember, on all of these, we're going to look for the market to give us indication that there's a move lower coming, particularly in the chemical and energy subsector, before putting on any of these trades. If you have any questions, shoot me an email, Adrian@traderinsight.com. Use protective stops on every trade and have a great trading day on Thursday.